Hi there, my name's Gurrai Birdi. I'm a chartered professional accountant serving clients located throughout the GTA. In today's video, I will be discussing with you whether you should be paying out a salary or dividend from your corporation. This is a very common question that is asked by clients, and there are quite a few variables that have to be analyzed to determine which works best. Let's walk through the top factors which will help determine if you should pay out a salary or dividend from your corporation. The first thing you should consider is, will you be applying for a mortgage? The reason this is important is because banks verify your net income and source of income from your personal income tax return. The source of income is generally required to be earned income. Unlike salary, dividends are not considered to be earned income. This means you cannot rely only on dividend income for mortgage purposes. The second thing you should consider is, do you wish to contribute to RSPs? A registered retirement savings plan requires sufficient contribution room limit. This contribution room limit is increased based on your earned income each year. This means you will need some salary if you want to continue contributing. The third thing you should consider is, do you have any childcare expenses or moving expenses? These expenses can be deducted on your personal taxes only against earned income. This means you cannot rely only on dividends to maximize this personal tax deduction. The fourth thing you should consider is, do you have any tuition tax credits? You will need to strategically tax plan if you will be only taking dividends from your company to ensure your dividend tax credits do not go to waste on your personal tax return. This is important because dividend tax credits cannot carry forward, and you will not minimize your personal taxes if you don't tax plan for this one credit. The fifth thing to consider is, do you wish to contribute to the Canada Pension Plan? If you have no other source of retirement savings, you should be careful to not rely only on dividend income because it is exempt from CPP contributions. The last thing to consider is, will you be deducting certain business expenses from your corporation that require you to be an employee? Certain expenses in your corporation can only be deducted if they were paid to an employee of the company. An example of this is the tax-free car allowance and medical benefits. This means you cannot rely only on dividend income to maximize your corporate tax deductions. Now that we know the major factors that help determine whether you should pay out a salary or dividend from your company, let's consider what are the most common solutions found in practice. Salaries. I find few clients who prefer to only take salary from their company. It's usually clients who are planning to rely on the Canada Pension Plan and RSPs in their retirement age. Another thing with salaries is it requires more accounting work. You need to prepare payroll schedules and submit monthly remittances to the CRA. Keep in mind though, there are tax situations where a salary is more beneficial over dividends. For example, when your corporation's net income exceeds $500,000. Dividends. Many clients take only dividends since approximately the first $35,000 is tax-free if you have no other source of income. This works really great in income splitting with family members because you can multiply it. Another major reason for this is many wish to avoid paying CPP tax and have other sources of retirement savings built up, such as real estate property. The only drawback in dividends, after the top factors already discussed, is you have to be a shareholder of the company in order to be eligible. A combination of salaries and dividends. This is the most common category I find clients in, mainly due to the top factors discussed, which will maximize all your tax deductions, both personal and corporate. This is usually the most strategic way to go. Salaries and transition to dividends in upcoming years. Clients in this category are usually individuals who have an upcoming mortgage renewal or are applying for a mortgage. In order to get approved for the mortgage, they temporarily take a salary and later switch to dividends. I hope you found this video helpful. Do leave us a comment. I encourage you to visit our website at birdi.ca. You can leave us a question on our tax forum, read our blogs for tax tips. Most importantly, don't forget to subscribe for more tax tip videos on the way. Thank you for watching.